Hello, and thank you again for watching one of my 2024 holiday video messages. This message is specifically to talk about credit unions and the rules relating to asset and debt payment. Pardon me. For those who are just going to watch the headline, the short version is this. My recommendation is that you do not have your debt, whether it's a home equity line of credit, mortgage, credit card, whatever, at the same credit union as your assets. So checking, savings, CDs, etc. Now, if that's all you wanted to know, thank you for watching. Have a good day, and I'll talk to you later. For those who are going to stick around and hear the more detailed explanation, please let me start with the disclaimer. I have accounts at several different credit unions, and I love them, and they serve a wonderful purpose. But one of the federal regulatory differences between a credit union and a bank is that when you die, a credit union can pull money directly from your assets to pay off your debts. So, if you have a BECU credit card and you die with $3,000 in pending payment because you hadn't gotten the bill yet, the normal course of action would be what's called a probate or non-probate notice to creditors. And before anyone would be allowed to be paid for that debt, they would have to file what's called a creditor claim. It has to be served on you, on either your attorney or you personally, as well as filed with the court. It's a two-step process. I have saved over $2.3 million in debts in the last 190 probate cases I've done since 2016 for clients who have gone through this process, and people, for whatever reason, people, banks, institutions, I use the generic people, did not file creditor claims. And so those estates were allowed to walk away from those debts legally and lawfully forevermore. However, BECU, as a member credit union, and any credit union, this isn't just about BECU, but I know from my own experience with my own mother's passing, they went straight into her checking account, pulled out the money, and paid off the debt without having to go through the creditor claim process. Now, at the end of the day, I would have still paid it, but they had an obligation, if they were a bank, to go through that process. So, for example, Chase, Bank of America, Wells Fargo, Key Bank, Home Street Bank, none of those banks are allowed to reach from one silo into the other. So you can have an Alaska Airlines credit card with Bank of America. I do. Or a Chase United Airlines card. I do too. Or an American Express Delta card. Got one of those too. Can you tell I like to travel? I like those free miles. Those banks cannot go into a checking or savings account and pull the money out. They are federally regulated. Those silos are built in federal law, and they cannot be crossed. And so, if Chase Bank wants to be paid for their United Airlines credit card, they have to file this creditor claim. And if it is a valid claim and it's done timely, then the estate has to pay that money. But again, it's a two-step process, and I don't track much in the way of dollars, but I have, from the first time I did my very first probate, I have tracked all of the money that were outstanding debts that were never filed as creditor claims, or that were filed in violation of the rules and were not done right, or they weren't done timely. And we got to send a letter that said, hey, thanks so much for sending that in. You missed the deadline by 3 days, so sorry, we don't have to pay you. Go away. So all of that is to say, if you love your credit union, fantastic. I'm glad you love them. They're amazing people. Many of them are very much about wanting to know you and develop relationships. That's great. But if you have your car loan or your home loan or your home equity line of credit or your credit card with a credit union, my strong recommendation is you do not leave any money in that same credit union. Go down the street to another credit union and open an account to put your money there. Because I like the laws of the state of Washington. I like that when you pass away, again, whether you have a trust administration or a traditional probate administration, which is the preferred method in Washington, there is a process that from the minute you die, no one is allowed or entitled to payment until you've gone through this creditor process. That is, except for credit unions. So again, I get it. I'm not saying don't have a credit union account. It's not what I'm saying. What I'm saying is when you pass away, depending on what your debts are, I could literally be saving your beneficiaries tens of thousands of dollars. One of the highest creditor notices I got to work with the client was over $70,000 on a credit card bill. This was a higher net worth family, and they had just done a bunch of purchases, and there was a sudden passing. And that bank did not file the creditor claim. Now, I thought for sure they would. I kept telling the executor, don't spend this money. They're probably going to come for this. It's a high enough amount. I can see banks not wanting to spend the time or energy to collect $500 or $1,000, but $70,000? I thought for sure they were going to come. Well, then we went through the creditor period and 4 months passed and not a single claim. They had walked away from that debt. Did BECU walk away from the $800 that my mother had on her last credit card? No, they did not. They took it right out of her checking account and paid it off. The good news is I had actually moved almost all of my mother's money before then. And so they took what was left, which was like $300, and they still then were owed $500. Did they send the creditor claim? No, they did not. And if you're wondering why, Brent, I don't understand. Why would these people walk away from so much money? Because these are multinational organizations, and even a credit union, they're making millions of dollars to give back to the customers. Fine, sure, whatever. I don't care who gets the money. Banks and credit unions are there to make money for somebody, bottom line. And the problem is if you're a multinational bank, like let's take Bank of America, they would need to have somebody that knows all of the different processes around every single jurisdiction within the United States and, frankly, any country where they operate that have similar laws. That's a lot of attorneys. And again, when they're already making billions of dollars in profit, they figure, what, this person's paid us so much in interest over the last 25 years. It's not worth it. Now, I do want to follow up and just say, Chase Bank never used to file a creditor's claim. Never. From 2015, when I opened my firm, until I want to say 2023, January 2023, I never got a creditor claim. And then inflation hit. Interest rates started going up. And they started filing those creditor claims. So again, it's a roll of the dice. I don't know who will or who will not file creditor claims. And as I always tell an executor, if a valid claim comes in and you have the money, you do have to pay it off. It's that joke about death and taxes. It's a certainty. If you die owing money and a valid claim comes in, you have to pay it. I just want to make sure everyone out there knows that credit unions have their own special federal regulations and rules that exempt them from this process, which is why I strongly encourage keep your assets and your debts in separate credit unions. You don't have to go to a bank. Go to Harborstone Credit Union and put all of your money there and have your debt at BECU, or vice versa. Go to Harborstone Credit Union and get a home equity line of credit or a car loan and take advantage of their great rates. And then have your checking account at BECU. Just don't put them together. That's it. If you have questions, want to talk more, feel free to give me a call, 253-285-7751. Thanks for watching.